Everybody is talking about decentralized finance again. First we had Hyperliquid, then we had the Aster protocol on the Binance Smart Chain, and now Apex is rallying. Now, is this a token that's still worth buying, or is this potentially a pump and dump? Let's have a look at the on-chain data, the data most people are not considering. So this is the performance this week. Apex has almost 10x'd, but even today we are appreciating a lot. The chart looks pretty much like a hockey stick. We are now at $2.46. And Apex is another decentralized exchange. Now in the early days there was only spot trading, but now we've also got perpetual futures. And it's the perpetual futures that are currently causing all those rallies across the board. We've talked about this in the videos of Hyperliquid, in the videos of Asterdex as well. Feel free to check out those videos as well. Now, whenever there's a massive rally like this, there's only two possible explanations. Either we've got market manipulation, potentially by the market makers, potentially via perpetual futures, or alternatively, we actually see purchases on chain. Let's have a look at what's going on for Apex. Now, the usage statistics on DeFi Llama don't necessarily look that great. This is the Apex total value locked over time, and that's only at 28 million. Now, that's very, very small. Here's the trading volume over time. Again, there's not necessarily much growth. Nothing that would justify a rally like this. On Arbitrum, we saw 262 wallets interacting with the token in the last 24 hours. There was actually less buyers than sellers, yet the price appreciated by almost 50%. On Ethereum, the situation looks slightly different. Here we've got more wallets that interacted with the token, and here we also have more buyers than sellers. Now let's have a look at this in a bit more detail. On the Arbitrum chain, we've got 10,000 holders. On the Ethereum chain, we've got 5,000 holders. Here's the Apex price relative to Bitcoin over time. And it seems like we are trading in somewhat of a range. And this recent rally is just a partial recovery of the massive bear market we have seen before. From top to bottom, this was an underperformance of Apex relative to Bitcoin by 98%. Now, why did the price go down that much? One explanation could be tokenomics, as in the supply of Apex is growing over time. It went from 88 million to currently 123 million, and there will be a massive unlock at the beginning of October of this year. And that unlock might cause the current rally. Now let's see where this demand is coming from, because the usage statistics of the platform on DeFi Llama aren't really that encouraging. But somewhere, somebody has to buy. Is this happening on chain, or is this happening just with short-term leverage via perpetual futures? The answer is, initially, there was a lot of perpetual futures demand. The funding rate was massively positive for Apex. So the longs paid the shorts in order to get more price exposure. At the same time, we saw the open interest for Apex going up. So that's the amount of bets on the price. Nobody was interested in Apex at all in the last weeks, and this is now suddenly shooting up. And so whenever there are more bets on the price, whenever there's more speculation on an asset, the asset tends to also go up on the spot market. And of course, the trading volume is going up with that. But what I find interesting is that the open interest, so the financing rate, is actually normalizing again, while the Apex price continues to go up. And so here are the on-chain metrics. On the left side, the number of retail investors. On the right side, the number of whale investors. Now this is for the Arbitrum chain, and this is something we normally don't see when there's just short-term manipulation on the perpetual futures. We see constant accumulation by the small retail investor, so by the wallets that hold at least 500 tokens. We also see accumulation by the larger retail investors, so that's now 5,000 tokens. And on the right side, we go another 10x in minimum holding, that's now 50,000 tokens. So that's roughly $1,000, $10,000, $100,000. We can see that all wallet cohorts continue to buy Apex, and especially the whales, they have suddenly massively bought into the token. We see the exact same development on Ethereum. There's more holders across all wallet cohorts. So I do not think that this is just a short-term quick push through the perpetual futures. It doesn't seem like this is just a short squeeze because of the tokenomics. Because yes, it might be attractive to bet on falling prices after things go down like this, but we have already stabilized for quite a bit. So if there's a short squeeze, that should happen before a stabilization. So a short squeeze doesn't really make much sense as a narrative, especially since we see purchases across the board on-chain as well. And so this makes me quite optimistic about Apex. Despite the very quick rally, it seems like there's broad accumulation. If you only want to bet on a price very short term, you just use leverage via perpetual futures. But if you want to get long-term exposure, you buy on the spot market. And spot market buying is exactly what's currently happening for Apex. Now, isn't it fascinating how the asset selection itself seems to be rather a secondary problem, as in there are market phases where everything is going down at the same time. And then there are other market phases where most altcoins tend to go up. There's just so much correlation within crypto. What we see in green, that's the market cap of the altcoins that are not in the top 10. What we see in orange is the market cap of Bitcoin. What we see in blue is the market cap of Ethereum. So this is just relative performances over time. They all go up and go down at the same time. Now, what's important to note here, though, that this is a comparison of market caps. It's not a comparison of prices, because actually the small altcoins tend to perform much worse than the market cap implies. This here is the performance of the smaller altcoins, so from rank 800 to 900 in the last year. There are a few outperformers. So there's 1, 2, 3, maybe 4 altcoins that did roughly 100% and a bit more. Now, why am I talking about the 100% cutoff? Because that's how much Bitcoin made in the last year. So that should be our benchmark. All the altcoins that did not return 100% in the last year did much worse. And that's obviously the vast majority. We are seeing here 100 alts and only 4 did better than BTC. So really, trading altcoins is incredibly risky. Now, why do the altcoins perform that poorly? It's because of tokenomics, or in other words, the supply of many altcoins grows very quickly, much faster than the demand, which then depresses the price. There's all kinds of different flavors of token inflation. There's the constant inflation, like over here for ApeCoin. There is the cliff unlocks, as over here with 1inch. Or there's a mixture of both. We've got constant expansion plus cliff unlocks. That's now here as an example, XE Infinity. And so because of that increasing supply, just holding a broad basket of altcoins is a very bad idea. This is a good idea in the stock market. It's not so good of an idea in crypto. Have a look at what happens with most altcoins. This is ApeCoin over time. This is 1inch over time. And here is XE Infinity over time. When the supply grows constantly, the price tends to go down because the demand has a very hard time catching up. And so I personally generate my alpha, my outperformance over buying and holding Bitcoin with exactly that strategy. I still like to hold Bitcoin, but at the same time, I'm also betting on falling prices of especially the weaker altcoins that expand quickly in supply. I made many videos on the topic, but actually you don't have to watch all of this. Just have a look at what kind of outperformance can be achieved. What we see here in orange, that's Bitcoin. And what we see in green, that's going long Bitcoin and short ApeCoin at the same time. So we're betting on falling prices of ApeCoin. At the same time, we're betting on rising prices of Bitcoin. And then we get this nice performance, which is way steeper compared to what just buying and holding Bitcoin provides. Here's Bitcoin versus 1inch. So again, massive outperformance, 4,400%, while just buying and holding Bitcoin during the same time period returned less than 400%. And over here, we've got Bitcoin relative to XE Infinity. Now, this is just a few examples. I'm actually following this strategy already for the last 4 years. And had I just dollar cost averaged into Bitcoin, I would have gotten this performance here in light gray. But because I also bet on falling prices of highly inflationary altcoins, I got the performance here in black. Now, very often, the first reaction that I get when I describe this strategy is that this is too complicated. Just tell us the next big altcoin that makes a 10 or 100x and everything is fine. But I don't think it is. Because again, just have a look at these smaller altcoins in the last year. There is a 90+% likelihood that you're going to do worse than Bitcoin. And even if you pick an altcoin that's doing better, once you diversify a little bit, the portfolio is likely going to go down. Again, because the insiders constantly cash out and dump on the average retail investor. This is an unpopular story within crypto because it doesn't sell as well, right? Most influencers, they actually get paid by the crypto project in order to promote the project. And so they just say this is the next 10 or the next 100x altcoin. And then of course the insiders, they dump on retail, the altcoin actually crashes and does not do the 10 or 100x. And so I just like constant outperformance over trying to find the one lottery ticket. Now in the end, it's actually not that complicated to set up those relative valuation trades. There are only 2 videos that you have to watch. Here's the first video using perpetual futures on Hyperliquid. And here is the second video, risk management with relative valuation bets. Once you've watched those 2 videos, which is in total 1 hour of content, then you know exactly what to do in order to get this performance or this performance or this performance. After you've watched those 2 videos, I will share my favorite trade with you. And those favorite trades have still a lot of token inflation ahead. The 3 examples that we looked at, they have already inflated. Most of the supply is already circulating. But my favorite trade still has a lot of token dilution in front of it. So it's likely going to continue to underperform. I'm so confident in that particular trade that in case you do not make money with that trade after holding it for 1 month, then I will refund the premium membership fee to you. So you don't pay anything for premium if that trade doesn't make you money. So the whole idea is that premium pays for itself. You sign up, you watch 2 videos, you open the favorite trade, and again, if you don't make money with that trade, you will get the $125 back, no questions asked. A link to premium should pop up directly here on the screen. Just click on that. It will lead you to the website. If it's your very first time here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.